Good morning, folks. I thought I'd do a quick update for you. I've just got back from the beach and it's beautiful outside for a change. This is the natural gas chart, and I'm just going to be talking about natural gas quickly now. We've pulled back into the gap a little bit, which is kind of good news because it was just sort of lingering there at the top here above the gap, not really doing anything. And now we've got a little bit of movement down. We haven't completely filled this gap. There's the bottom. But remember, it's a rollover gap, so it doesn't necessarily need to be filled. But what it has done is it's moved to the top of the previous rollover gap, which is over here on the previous contract. And this is the 4-hour chart. So we'll have a look at this on the day chart to see what that gap looks like compared to where we are now. So let's go across there quickly. And remember, this is the NYMEX Henry Hub futures price. And there's what it looks like. So pulling back down there to the top of the gap. Remember, the top of the gap and the bottom of the gap both act as support or resistance levels. In this case, obviously, it's a support level, and so is the bottom of the gap. The bottom of this gap's not actually too far from the bottom of this one, and where the 20-period moving average is. So it is possible we might have to get back down to 2.5 on the futures contract. I'm not ruling that out. The storage report didn't really help much one way or the other. I do like the support here. It's a big order block. It's the Fibonacci retracement, 38.2%, and the 20-period moving average. Look at the 50 curling up as well. And we've got a blob there that I drew in some time back, which is still there. So I think if we don't pull back down there, we'll bounce off the top of this rollover gap, or we might have to move down into this area down here at around about 2.5. Now, remember, I also cautioned that it's potentially possible we might need to get back down to 2.25, this block down here, and my next really key support level. I've got the red lines drawn both those levels. That one, 2.5, 2.25, and look at this long-term rising trend line coming up underneath, and I've got my 3 paths here that I drew in the last video. So we're going to follow one of the 3, and we're still within the sort of gamut or the clammy hands of this green line so far. We've only reached the bottom of where I drew that squiggle. My squiggles seem to be uncannily accurate, as they were over here when we dipped down to below $2. Touched my squiggly line twice. On the 4-hour chart, it's more obvious. So because it's the top of the previous rollover gap, and it's where my squiggly line ends, maybe it'll hold here. Otherwise, we're going to follow this red path down to 2.5, or at the extreme, I think, down to 2.25 and the channel bottom or the triangle bottom. We're still inside this triangle, folks. We haven't moved out of it. It's a consolidation triangle, probably a reversal triangle. Triangles are not my favorite reversal patterns, but that's what we've got to work with. And we're still within it. So we've got a nice structural sort of pattern going on. I always like patterns. Most people like patterns. Humans like patterns. And you'll find the markets often trade along patterns because we recognize them and we like them and we're familiar with them. So we have a pattern. That's a good sign. And whether we're going to hold here or not, or reach the bottom of the channel before a breakout through the top, which I think is more likely than not, a breakout through the top. Once we get a higher high, look at the last video I did yesterday on this, really important. Once we get a higher high, in other words, a close above this previous level at about 3.01, 3.02, $3.02, we'll have broken this downward trend. We've got consecutive lower highs, but we've also got consecutive higher lows forming this triangle. Well, that's it, folks. It's Friday, and there's NFP today. It's going to have a big influence. We've got the ISM numbers coming out too, and it's the Friday before election weekend leading into Tuesday next week. Everything's going to change up, and it's going to be a little bit weird. Overall, though, however, I think that if the Republicans get into power, which is not by any means certain, we should see natural gas moving upwards into next year rather than downwards, and it could be vice versa if the Democrats get into power. I don't know what's going to happen. I don't think anyone does. It seems to be literally 50-50 at the moment. So be careful, expect anything, and don't bet one way or the other on these markets, in any of these markets. Take care.
Not gas kings, we trade for grace. It'll make them smile, lights up the place. Market swing, but we hold our base. Double bottom strong, we're in the chase. Come on, click and clack that online race. Charts go wild.